Evercore ISI out with its 2024 market outlook, calling for the S&P to reach 4750 at the end of next year, following a mild recession in the first half. The price objective just 128 points higher than today's close. Joining us now is the person behind this forecast, Julian Emanuel, Senior Managing Director at Evercore ISI. Julian, always good to see you. You just take a look at the absolute numbers, and it doesn't seem like there's much movement, but you're actually saying that there's going to be a lot of movement within the year.
Yeah, a lot of churn. So, look, we were treated to a very non-volatile year this year. As much as people want to think, we did have a banking crisis for a couple of days back in March. We had a peak when the Fed made what we think it was the last hike in the cycle. And if you drop back and you go back to the last time sentiment was this low in terms of numbers of bears, it was early 2018. And if you think of all the roller coasters that we've been on since then, the one thing as an investor that you can't do is let your emotions go and sell low and buy high. And the way we look at the market right now is that there's going to be enough event risk over the next 12 months, and there's enough tightening in the pipeline so that there will be that temptation to sell low and buy high. And we don't want to do that. And we want to message the fact that it's going to be a year where you're going to have to be patient. You're going to have to play a little bit of defense, having played a lot of offense the last number of months, and that ultimately patience will end up being rewarded.
So what does that mild recession look like, and when will stocks start pricing that in?
So we think it's sooner rather than later. I think we've talked a few moments ago about sort of the first quarter looking a little sloppy, and obviously December tends to be very positive seasonally. But when you think about the catalysts, two potential government closure iterations, an election in Taiwan, a number of other things, the Iowa caucuses, that entire cycle starting up against the backdrop that the economy very slowly but perceptibly is weakening. And there is the fine line, particularly with the tick up in unemployment. We do think that the caution will be warranted coming into the new year.
Julian, 4750 in the S&P would be 20 times, almost on the screws, your 2025 earnings estimates of about $235. So there's obviously some math associated with that. But what are the chances that 235, given everything we just heard from Hasbro, again, I'm not making Hasbro to be the economy, but continued layoffs across a number of sectors, that 235 is high. What are the chances?
So our view is actually, when you think about 2024, where consensus has it wrong is consensus is too high for 2024. That number is more like what people are thinking about 2024. And obviously, that kind of news, we think this is going to be the third consecutive year of essentially unchanged earnings, right? And so when you think about valuations, remember, this year was entirely multiple driven. Yes, it was driven underneath the hood by a number of stocks whose earnings did rise, but at the aggregate, multiple driven. The fact is that the risk to earnings is less about the exit out of the recession, because you do get an acceleration, and more about sort of what's right in front of us.